Good morning, one and all, and welcome to this morning's video. So I have the same two pairs on watch again, and those are the soybean USD and sugar USD. So I'm going to break them down for you now. Of course, if you've been watching my videos on a regular basis, you will know the thought process surrounding these pairs. But for those that don't, I'm going to do that for you now. And as I said, it's all about repetition trading. So in my experience, getting good at anything is about repetition. Okay, so if these videos seem boring to you because I just keep repeating the same things, then perhaps that means that it's being ingrained in your mind. What I'm trying to teach is being ingrained in your mind, and that's a good thing. Okay, trading is not meant to be exciting. The people that are lose money, many of the people that are losing money are looking for excitement from the market. I'm definitely not looking for that. Okay, I'm looking to stick to my rules and to trade in as much of a mechanical way as possible. And so let's break this pair down for you now. I think this is the closest I've been for some time to having an entry shape up, but this is the time when people lose their composure. People wait patiently, like here, for example. People would have been waiting and waiting and waiting and waiting for it to get to this area. Then it starts to sell off, and there would have been a lot of losses taken in here. Yes, it was an impulsive move, but there would have been a lot of losses in here taken out of FOMO. Okay, and you can see that all over the place. Okay, with these near misses here being another example. People, this is more visible on the as we drill down, but people would have been waiting for it to get to there, and then it gets close. It starts to move. They fear it's going without them, so they start selling and take a whole bunch of losses in there. But so when your entry is closest to shaping up is when you're more likely to disobey your rules, okay, and jump in because you've been waiting patiently. Then suddenly it looks really, really close. You haven't maybe taken a trade for a while. It looks really, really close to shaping up. You convince yourself that it's ready. You take the trade, take the loss, and then you realize, you look back at it and you go, that wasn't really ready. Okay, so patience is easy when price is miles away from doing what you need it to do for your entry to shape up, but less easy as that entry gets closer and closer. Okay, but anyway, let's break these down. Soybean USD. So on the higher time frames, the things that jump out at me straight away are, we have this high here. This high takes out this high but leaves a gap to this high. Okay, so we get that kind of first drive, the second drive, and I'm just seeing this because we have an impulsive move up followed by a more corrective move down. I'm seeing this potentially at some stage, and I use that some stage being the operative word. We may get that to complete that because that would look like the typical structure that we see. Okay, and then this would be some kind of expanding pattern. But obviously, if we only ever waited for that, we might our trade frequency would be even lower than my trade frequency currently is. So these things can take a long time to play out, but this is a factor in my thinking. Okay, and what may happen is that we have this little area of consolidation here, which is it's kind of below it, but it's a failed sell structure. So we tap into that area. It looks like it's going to sell off and then doesn't. Then we come back down and we near miss to that area. So that's given me a clue that this is potentially an area of significance. Okay, this overall area here. Okay, but again, once again, the next question I ask myself is, okay, well, how we tapped into that area. Okay, so potentially that could be the base for that move to the upside to take out that high, which we near missed to. But how have we moved up from that area? Nature theory. How did we respond from that area? Did we respond in a series of impulses and corrections like that? Or did we respond in a non-progressive way? We responded in a non-progressive way because we scooped all the way back down to there and retraced about 85-90% of the move and then moved up. Okay, so that's non-progressive price action. Okay, especially when we have stuff like this where we wick above, we break back below there again, and then we're moving up more slowly than we move down. Okay, suggesting this is an exhaustive move up, and also suggesting that we may take out this low, that this low near missed too, and because there's nothing of any significance below here, what might happen is this acts as a kind of double bottom base where we take out the low we near missed to and then move to the upside like that, okay, to take out that high up there, which this high near missed to. So that's the thinking as I'm breaking this down. Okay, so we have this little wick here, which would be inevitably more visible on the daily chart and below. We tap into that, we wick just above, but most of the wick is below. Okay, so I'm not surprised, even though we did wick through and not just two, I'm not surprised that this didn't commit to the downside, even though I was actually looking for entries in here, which I didn't manage to get. Okay, and the clue was that we had this bullish candle with a big wick below it after this weekly close, suggesting that we would come back up to perhaps give us a scoop double top, an M style pattern, which you'll see more visibly on the lower time frames, to come down to take out this low this low near miss too. Okay, so if I just drill down, so we have that we have that kind of structure where we have this parallel 1 2 3. Okay, we have a move up, a move down, which is more corrective than the move up which has preceded it, and then we move to the upside. The last leg tends to have momentum, which it does there if we're going to push to the downside. Then we get this evening star formation, and price follows through with aggression. Okay, we tap just above there, as I just mentioned, by way of that weekly candle that I was talking about. And then we have, at this point, it was looking good for the sell. Okay, so we had the impulse tight correction. This looked like it was going to follow through. Then we had a slightly wider correction. Okay, and as I said previously, typically speaking, these kind of corrections would usually appear sort of more halfway down in the range like that. Okay, so it's a little bit atypical for it to appear that high up. So that was partly why last week I was looking for entries in this area. I'd push down and a flag, and I didn't manage to get it. Okay, because we kind of we near missed that area as well, but I didn't manage to get an entry there. And then when, excuse me, voice is starting to crack. So when we had a correction which was this wide relative to the move down, that gives me a clue that this is an M style pattern. That is definitely disproportionately wide. And even if you were to look for a push down and a flag here, which you definitely could have done, okay, this would definitely increase the risk. And one of the reasons, if we just zoom back out, one of the reasons that we look for a push down and a flag is because when things like that happen, so when we have an area like that, okay, one of the reasons why you would only ever look for an impulse down and a flag from this area is because if you was to take a rejection such as that candle there, or perhaps that one there, you would be tagged in by that wick and then tagged out like that for a loss. Okay, so the push down on the flag is you waiting for the market to show its hand, show that. But even though this is very wide relative to the move down, if we get the push in the flag, that's the market confirming, look, we don't need to go back up to this area to get the liquidity to then move to the downside. You're good to go. But we didn't get that. Okay, we just got a rejection candle trapping sellers in too early, and that's why you see me waiting for these push downs and a flag. Okay, so that's not relevant anymore, so we can take that off. And then we pushed up. So I saw this as tapping into this high again. What happens? We near miss. Many people would have been patient. They would have been patiently waiting, sitting on their hands, waiting for it to get to this area. It gets close. They see a candle like this. They fear it's going without them. The market's not going without you. It doesn't have to wait for you, like it doesn't have to wait for me. Okay, the market it's not intentionally doing anything to you at all. The market is just doing what the market's doing. But people say, oh, it's going without me. It's not going without you. The market doesn't care what you're doing, whether you're making money or not. Okay, so when I saw this, as I said, when we're in this area, there would have been orders still up there likely, and orders being placed in that area because people would have seen it here and gone, okay, I'll place my order up there, which means that likely these sellers would have been trapped in too early, okay, and then taken out for a loss, okay. And then we have a near miss to this high, another FOMO channel. People start selling because they fear it's going without them. Didn't even reach that high. They all then get washed out. We then eventually break above this high, okay, wash out all the liquidity that was there, and then we see exactly what I've been anticipating the whole week, which was an impulsive move to the downside. As I said, if you watch my videos regularly, you'll be thinking, how did you predict this was going to happen? Because I've seen it multiple times. I've been doing this for 5 years now and trading this strategy for literally 4 years, 4 days ago, I think it was. So I've seen these things over and over. And what I've been forecasting all week is this. And look what's happening. Okay. So I've just moved this slightly, just changed the proportions ever so slightly, but this is what I have been looking for the whole week. We've washed out the liquidity. You see the impulsive move down. Okay. And now we have that correction afterwards. So I was looking for, and I'm still looking for, that 2-touch 15-minute continuation. This is actually a 1 hour continuation now, because it's I start counting from the first 1 hour candle there. We've had 1, 2, 3, 4, 5, 6, 7. That is a 1 hour continuation, but as a minimum, I was looking for the 2-touch 15-minute continuation. We've got that. However, this at the minute just looks a little bit undeveloped. Okay, so I would be looking at this on the 15-minute chart. If you just switch to the line chart, which is something I like to do, it only has one bottom. Okay, so what might happen? Okay, so that's something I like to do. I'll be looking for something when you've taken enough losses over the years, you start to see things. So what I'll be looking for is price to come down like that, push up from there. If we get the push up, that on the line chart, that would look more like that, and we'd have the second bottom. Okay, so this is where people jump in too early. We would have something like that, and then we would zoom back out, and then yes, that would look proportionate to the move. The correction, the sideways correction, would be proportionate to the move down which has preceded it, and then I would set the entry on the break. So something like that. Obviously, I'm just drawing this crudely, and with a 10 pip stop loss, we would have something like that. So the entry would be a little bit lower. Okay, so something like that. And then what I would be doing at the same time, if we got that push up from there, got a more of a base, okay, I would be looking for the risk entry within the flag here. So I would have this order set, but at the same time, what I would be doing, so actually, let's just put that back on the chart a second. So if we got the push up from there, I would also be looking for price to tap into, try that again, price to tap into that high, okay? And then I'll be looking for a rejection from there. And if we got it, okay, by that point, we would likely have a little 1, 2, 3 leading up to it. If we got it, then I would look to get short with the risk entry up here with a 10 pip stop. That would probably look quite strange like that, but it would be something like that. And then I would cancel the order that I have on the break, okay? And then, depending on which one we got, okay, I would be able to manage it down to here for about 3.5, 4%, and then I would set a take profit at this area here. So measuring from range to range, okay. I've got the wrong fib settings on there. Bear with me a second. Take profit. Boom, there we go. So I'd set a take profit there and trail my stop loss accordingly. Okay, so that's what I'm going to be doing. And what I've done, just to see if we can get that second bottom, as I said, on the on the 15-minute chart, which is where I'll be filtering this, we only have the one bottom. Okay, so I'm looking for a little bit more from this pair. Okay, and what I've done is I've set an alert just below this little bit of consolidation there, just below that low there, to see if we can get that bottom. Okay, and then I'll set another alert above to see if we can push back up to give a bit more of a base, and then I'll set the entry on the break. Okay, and of course, if I do get that entry, then I will let you know what's happened in the next video. Okay, so I'm gonna have to speed up now because I've rattled on a bit too long for that one. So that alert is set there for the time being. And Sugar USD doing exactly what I thought. As I said, sometimes these forecasts don't do what you think at all, but the majority of the time they do, because once you've seen patterns enough, you know what's most likely and what's not likely. Okay, so we have this high here. Why is that significant? One, it's quite sharp. Two, there was volume built there. Three, there was a big sell-off from that area before. And four, it was also a sell-off which broke through this brick wall low. Five, it wasn't just a move that broke through a brick wall low. It was a move that broke through a sharp brick wall low. Okay. So there must have been a lot of liquidity for all of those things to happen. Okay. So that's no surprise to me that we responded to that area, and we did respond with a level of aggression. Notice I said a level of aggression. Okay. Because if we just analyze this, we can also see that the market fell more correctively than it moved up. This might seem basic stuff, but it's so simple to think this way and so simple to not think that way. We then have a 1, 2, 3 leading up to that area. We scoot back up, break just above, tap out the liquidity that was obviously sat above there, and then we see a massive sell-off to the downside. So at some state, I was seeing this potentially as that and a potential move from there, especially because this was sharp. Okay. But what has price done? Price has shown its hand. It didn't respond from that area. It just completely smashed through it. And now it's consolidating below, suggesting that there was not enough liquidity here for that structure to occur. Okay. And that instead, what price wants to do, or what it's trying to do, is form volume underneath there for an impulse correction continuation to push lower to potentially tap into this area, which happens to be the base of all of this. Okay. So that's how I'm seeing it at this moment in time. The clue is that we left a footprint. Okay, a sharp move up followed by a sharp move down, which just happens to be the retest of the back of this. And then we had, when I stuck this pair on watch last weekend, I noticed we had this sharp move up followed by a sharp move down, and I thought it likely that this usually, or more often than not, acts as the first touch within a 1, 2, 3 leading up to that area, especially when it's the retest of the back end of something significant, and that this would likely be, once we start to push up, once I see this looks like another FOMO move where we get the second touch, which breaks above the first touch, but near misses the area of value. And then this FOMO move, which is people trying to sell it whilst the orders that are still above, pound Aussie has just gone off. That'll be because there's economic data coming out of the United Kingdom literally in about 2 minutes' time. Okay, so people trying to sell this whilst the orders up here are dragging price up and being placed in that area. And what we'll likely see is that this may not be ready by the end of the day, but if we got that, okay, just speeding up because I've got 2 minutes left of this video. I wouldn't be looking for a risk entry from the top because the trend line would be like that, and then you could easily be tagged out. Price comes up to the trend line and then drops in your favor. So because of that, and because we are quite far into this run, okay, where many people may start taking profit, it's more risky to call the top of a structure such as what we're ranging within at the minute. So what I'll be looking for, quite simply, is a tap into this area of value, and the same thing that I was looking for, or that I am looking for with the other pair. A 2-touch 15-minute continuation, a push down, 2-touch 15-minute continuation, then I would look to get short on the break, or within the flag in the same way that I described on the other pair. And then I'll be able to manage it down to this first inflection point for about 4.5, about 5.5, 6 to the low. And then I would actually be targeting, in this instance, I'd be targeting that low down there using the mechanical management tool once again to measure 90% of the range, setting a take profit at that 90% mark, and then trailing my stop loss accordingly. So that is that. I'm going to check pound Aussie after this video, and of course, as I said, if I don't know where everything's gone off the screen. Okay, everything's vanished for some reason. There we go. We're back in business. We're back in the room. Okay, folks, I hope you've enjoyed this video, and I'll see you. Have a great weekend, and I'll see you again in the next one, which will likely be next week. Thanks for watching.